Welcome to another Wednesday night with Sonar, the only show that dives deep into the Sonar dashboard and the data that gives you insights into the transportation industry like never before. I'm your host, Tommy Igo. With me as always, my main man, Luke Velasca.
Back again.
Back again. How are you tonight, my friend?
I'm doing well, man. I'm doing well. Just
awesome.
Trying to hang out and try to get something done in the middle of the week.
Awesome, man. We've got a very exciting show tonight.
Yeah, we do.
Two-part special tonight. We've got two guests. Two people wanted to talk to you and I. Isn't that amazing?
I don't know why.
Well, we're going to jump right into it, but before we do that, I just wanted to give a quick shout out to my friends at Fleetio, my mug of the week.
That's right.
Love my mug of the week. Fleetio is an amazing startup company out of the Birmingham area. They're doing a lot of innovative things with software for saving you time and money on your maintenance and fleet management systems. So check them out at fleetio.com.
Nice.
So guys, like I said, very exciting show tonight. So I'm going to introduce our first guest. Joining us, our very own Sonar user.
Yeah. Customer.
Executive Vice President of Avenger Logistics, Jason Roberts. Let's hear it for him.
All right. Yeah. Jason, thanks for coming on the show.
Yeah, thanks for being here, Jason. I really appreciate it.
Why don't you take my seat right here?
Thank you.
They'll stick me on the end. That way, yeah.
Awesome. So that was an amazing round of applause, Jason. I appreciate you coming by. Tell me, Jason, a little bit about Avenger, and let's just start there. Tell us the story of how Avenger came to be.
So, owner of our company, Don Godsey, is an entrepreneur here in Chattanooga. He was a former owner of a promotional products company, Gold Bond. A lot of people are probably familiar with them, certainly in the Hickson area. And he's owned a lot of different businesses in a lot of different sectors. And his story is that he was driving down the road, knew that there's a lot of trucks out there, really decided that he wanted to go buy some trucks, so he started doing kind of a hard study over a month or two. Wanted to buy about 5 or 6 trucks, and had a couple of buddies really urge him to not buy trucks. Hey, maybe you should start on the brokerage side of things. There's a lot of upside without a lot of those inherent liability risks at the beginning of any company. So that's kind of where the company started, and since then we've had just tremendous growth here in both Chattanooga as well as Minneapolis, and that's kind of where we're at today.
So 2 offices now. It started right here in Chattanooga, Tennessee.
Yes, sir. Yeah, We've got an office here. We recently moved, somewhat recently moved back in August, which was a location on Shallowford Road, and it's pretty close by to a new space. It's about 24,000 square feet, so lots of space for us to grow, and we're certainly we have a hiring strategy that is really trying to push to get as many as 10 folks, specifically brokers, in each month, up until at least midsummer. So
fantastic. So trying to fill all 24,000 square feet, huh?
Yeah. It's a lot bigger space. We've for us, our company's really big into culture. Promotional contests are also something that we really do. So we've tried to make our company environment and culture somewhere that people really want to work. So there's a full service gym. If you come into the office, and I know you took a tour.
I had the pleasure of stopping by.
Probably saw some arcade machines, some Pop-A-Shot, some air hockey. I think there's we did a contest just a month or so ago where we bought a claw machine that people could go in and get products out of. So we really try to keep it fresh every month.
So Luke and I both came from the brokerage background, and that's kind of the main theme when you hear about new brokerage startups is that we got this fun culture, we're doing a lot of cool stuff, but what would you say really, and especially what your customers and future partners need to know, sets Avenger apart from everyone else?
Well, I think we have adopted that access model, that cradle to grave model, and I think there is something to be said about that versus the Chicago or the split model.
Yeah.
While that does work for larger scale customers, who we're typically targeting is that mid-sized customer, and service is always at the forefront of everything that we do. And we're not trying to gain customers, or sales, so to speak. We're trying to gain customers and have real partnerships with them.
Okay.
And so that cradle to grave model is, really caters to that a lot more. They're not necessarily bouncing around to 5 or 6 people.
Right.
When something bad does happen, they know who to talk to.
You've got your rep.
Yeah. And we really try to preach that each and every day, that there are a ton of brokerages. There's a ton of brokerages here in Chattanooga alone.
Right.
So how do you separate yourself? And you separate yourself with the relationships that you can build. You separate yourself with the solutions that you can provide, and that service piece. That's we know that we're not always going to be the cheapest, and we don't necessarily want to be the cheapest. Sure. But you get what you pay for, and we're going to make sure that we take care of your freight. We're supposed to be the easiest part of your day. That load is sent over to us. You can forget about it from there. We're going to take care of it all the way up until that thing's delivered.
Yeah,
so
I'm sure that's relieving to hear from all your customers.
It is, and I think that we do provide some solutions that not all brokerages have really caught on to. The partnerships that we've created with a lot of regional carriers has allowed us to provide some niche capabilities as far as trailer pools. In my experience, many customers that we've spoken with are usually very intrigued and very surprised that we're able to put trailer pools in at either a shipper or a receiver. Of course, the volumes need to be there, and there has to be somewhat of some stability there for that to make a lot of sense for both sides.
Right.
But we've been able to provide a lot of great solutions to our customers that I don't think there's a lot of brokerages that are out there doing. And then the other side of that is just we try to look for specialty customers. So what I like to call vanilla freight, which is your Chicago to Atlanta, one pick, one drop.
Right.
That's the easy stuff. Anybody can do that. They're probably looking for whoever can get it at the cheapest price. And even when you have that customer as a partner, most of us probably felt what the difference between 2018 and 2019 looked like.
Certainly.
They were your friend in 2018. 2019, maybe not.
Yeah.
And I think that the relationships that we built over the last couple of years, was also a testament to that, where we saw so many companies going under, so many brokerages not having such great years. Avenger was still able to have, some pretty solid revenue growth and some incredible margin percentage growth, which I know is not the norm in the industry over the past year. But again, sure. I think that a lot of that was because we tried to be as thoughtful as possible when we were selecting, real partnerships with customers. Who do we want to target? We want to target people that have real challenges. So if it's got a lot of stops, hey, the other guys are falling away. We're trying to shine through. If you need a trailer pool, that's more difficult. We want to do that. If you want expedited freight, we want to do that. Heavy haul, over-dimensional.
So call you guys for the hard stuff. Don't be afraid to reach out to Avenger as a brokerage just because it's the difficult stuff. You guys can handle it.
We want it. We want the difficult stuff. We want to show that customer, hey, we'll take the other stuff, but let us show you some value. We'll take the hard stuff. And our hope is that we're going to create a real partnership. Let us be the hero for you. And we believe that we're gonna get those other opportunities with them later on.
That's awesome. Very good to hear. So how did Avenger come to form a partnership with FreightWaves, and more in particular with SONAR?
Well, a couple of our folks admittedly left Avenger to come over here. So
you're the only people we've done that to.
Right. No hard feelings though. We are also we're very people-driven.
Sure.
And, our people are our most valuable asset, so we do invest a lot of time and energy into them. But if it's not for everybody. Yeah. Our industry isn't. It is high stress. It is
very volatile.
We know we know that there's a lot there to it. So when we always try to leave on the best terms possible with our employees, and when we understood what a couple of our folks were coming over here to do, we said that's they're a great company. It sounds like they have something really, and this is of course a little bit earlier in towards the beginning of FreightWaves' inception, sure. And that's kind of where that came from. Still had great relationships with those folks. In fact, I had personal ties to several of the folks that came over, so we kept up with you guys pretty closely. We're very impressed, and honestly at this point thankful that FreightWaves has been able to do, become so quickly this regarded authority in all things freight. And as I started diving deeper into that, started really realizing they have some great information here that can really affect the decisions that we make on a daily level, on a weekly level, and definitely, when we're looking into, on my side of things, I have to look at things at a 90,000 foot view.
Right.
What are we doing this entire year? What's our plan for next year? What's our plan this quarter and next? Instead of just reacting to the daily operations that we can all get pretty bogged down with pretty easily. So as that took place, Sonar came out. The guys gave us a pitch on it at first. I said, I don't know yet. I really want to understand it a little bit better. And then once we got a full demonstration of everything and the capabilities that were there, really decided, hey, we need to dip our toes and understand it. And now it's become such an important part of what we do. So could not be happier with the product.
Yeah.
I think it has really helped us, in a market that is so dependent on being ahead of everybody else,
right.
However you can. It has given us the opportunity to be a step ahead when others may not be.
Okay, that's amazing. Yeah, and that's what we love to hear, is being able to be that transparency in our customers' day-to-day operations, so that they can be the expert in the freight that they're dealing with and the customers' regions that they're dealing in. I hear Luke talking to folks all over the world every single day about how they can implement Sonar to change their entire business. So that's exciting to hear.
Something that you said that struck out to me. So Tommy and I both came from the brokerage world. He came from a split model with carrier and sales. I came from the cradle to grave model, and what I'm curious to learn a little bit more about how you guys are using Sonar is one value add of doing like the cradle to grave model is a lot about your customer, and your customer knows a lot about you. You handle all of their needs. You talk to all of their people. So one thing that Sonar allows you to do is to be able to really map out and tell your customers, hey, this is what's happening around you. This is why these changes are happening. This is what the market is exposing you to right now. That's why you're feeling this. Do you guys use it in that way? Do you use it also to ever educate your shippers? How do they react to that?
Yes, I just last week was in Seattle, and this was a potential customer, so this wasn't even a current customer.
Yeah.
And that's now part of, the value-added services that I try to bring to the table. And I, brought up a few things to show them, hey, here's some market data that you guys probably aren't aware of. And this was a Fortune 500 company that should be looking at these things. And one of those things that we kind of tell them is, hey, this is something that we like to educate our customers on so that they can make the best decisions. Again, at the heart of everything that we try to do, truly, it's not just to make a buck. We want to have a real partnership with our customers and with our carriers, and that's the thing that we try to do. So let me show you what we have, and let me encourage you also to reach out to these guys, because I think you need to be looking at it. When you're making those kind of high-level decisions, you should know when and where markets are really, changing in a quick way. And before FreightWaves, really the best you had was a week-old data. So we absolutely push that, both to our customers to educate them, and then on the other side, we absolutely try to make some decisions on our own to get a leg up when we see that markets are swinging one way or the other, so we can react a bit faster.
Absolutely. Absolutely.
Now, I know, Jason, you and I talked before the show a little bit about some of the things that your team is looking at on a day-to-day basis. And you guys have a few different things set up. You've got, how many screens did I see in there?
So there were 4 screens that we put up, and
on TVs?
Yeah.
Around the office?
Yeah, so, there's a grid, basically, and I will admit to you that these guys back here were the inspiration of it.
Okay.
The first time I came here, I said to John Bose, how much were those things? Because I gotta have it.
You gotta
and then
have
I found out how much they were, and I was like, maybe
I'll come up with something else.
So what we did was we put a grid. We've got TVs around our office, like a lot of brokerages, but one thing that we did was we put kind of a grid together of 4 screens, and it is all, 3 of the 4 screens are centered around Sonar data. Added a couple of extensions onto a couple of Chrome bars so that we could tab from one screen to the next. They would also automatically refresh every 30 seconds to a minute.
Yeah.
So 4 screens. One screen is going to show toggling between critical events, something that I think a lot of brokerages may take for granted a little bit on the importance, especially during the colder months.
We talk about it all the time. No one's buying Sonar for our weather data, but having it in conjunction with your freight data and seeing how it's affecting those markets is a huge value add.
In my mind, before we had that sitting in front of us, yes, there were the select few who maybe had the Weather Channel up.
Sure.
we knew when there were major road closures on major interstates,
Yeah.
but that was about as, or we knew mostly from the carriers that we were calling, hey, I need another $1.50 a mile because the chain laws are in effect where I'm at in Wyoming or whatever that case was. But I do think that now that that's up there, our people, and I think that's the other thing, and I would encourage other brokerages that are using that to make sure that if you're worried about your individual's buy-in, you got to put it in front of their face.
Yeah. Sure.
Our brokers, I think that's always a challenge in our world and our environment is, how much do you want to put in front of a broker who's already trying to go make a sale, who's trying to make, call
Right.
carriers? Where's the buy-in? So if you can give it to them in an easily digestible manner, they're gonna be able to do something with it. I think that there's a lot of data, ton of it. You can get lost in it quickly.
Absolutely.
If you let yourself. But on the other side of that, there's also some really great tools out there that put it in a really nice format. And it's like you said, that was our idea, was let's not have our people going into 5 and 6 and 7 different screens. Let's have it all out here. Here's some weather for you. Look at these spots. There's weather patterns here, here, and here. There's snow over here. You know that that's going to affect prices today and tomorrow. And then on the other side of this, let's look at some real good data. So that's targeting. We'll go between that, and then we use the new 3D map, which is also a great new tool.
Let's take a shot over to my screen here. I had a couple pulled up already that you mentioned that you guys look at. So on my left is our weighted rejection index, one of Luke's favorite new maps.
It's the money map.
The money map.
That's right.
And then you're looking at our head haul index with the outbound tender market share, or the how popular, how much volume is in a particular market, as kind of the 3D portion of that. So you're seeing not only decent head haul lanes and things like that, and who's getting some pressure with capacity, but also how big is that market.
Right.
So how are you guys kind of using these two maps in particular now that we have it up on screen?
Well, I think that the weighted rejection index, we put that out in front of our people just so that they can, again, understand, hey guys, here's the hot markets, here's the cold markets, here's where there's going to be some challenges. But we also try to make sure our people understand, hey, although this is going to be challenging, you're also creating a real opportunity to get your customer to say yes,
right.
Because someone else is telling them no right now. Why are they telling them no? We can look at that, and really, I think we try to look at those in conjunction with the other maps so that we can get a better understanding of maybe why that's happening. But we know what happens when it's happening, and that means that rates are going up. So
certainly,
our people understand that, and it's a lot easier of a conversation to get to go to broker A on the floor when he's saying, why is I can't find anybody out of Long Beach, California right now. Well, look on the screen.
Well,
we know that's going on right now. So let's make sure that we're as ahead of that, and that we can react to it as quickly as possible.
If you guys operate with a load board, getting those Long Beach loads off as fast as possible, go ahead and take those rates earlier on in the day. That way you're not stuck with them at 4:30 in the afternoon saying, nobody goes home till we get this covered. Right?
Exactly. And
I've been there.
Yeah, we all have, right?
Yeah, that brings back some bad memories. But we do try to get ahead of that as much as possible. And on the front end of that, especially on our side, especially in a year that we just came out of, that's where you made your money, was on the buy side. It wasn't with the customer. Yep. You had to take, unless they were a highly specialized customer, which again, we do try to partner with those customers. But our big guys, the high volume, you're going to get what you're going to get, and you can either say yes or say no. But the only way you're making money is the negotiating side with the carriers. And if you're equipped with the right knowledge, you're going to be able to have a lot more confident conversation with the carrier on why you know that this rate is a good rate that you're offering.
Yeah.
Right. Wow. Yeah, that's awesome to hear. So you mentioned that you personally, other than outside of things that are up on the screen, like to take a look at a couple of things as well. Like, for instance, our DAT rates nationally versus where OTRI is nationally right now, outbound tender rejections. Why is that? I mean, I know why we always like to show it. Luke and I like to show it to customers, and it's just a reminder that some of the information you're looking at today is behind what SONAR has given you, but I think it also gives you a great read on where's the market kind of stand today. Is it flat? Is it is it starting to heat up?
Right, so for me, I definitely like to spread it out for the year. I like to be able to really compare apples to apples to see where those trends were, how the year's starting differently for us. But you said that you've got you like to call that your moneymaker map. I would call this the buy-in chart because this is what shows people, hey, there's some real data here, and if you're watching, and to me, truthfully, this is what. When I first saw this was when I said, okay, we got to get this.
Right.
We got to have this data because you're watching this trail, and in almost all circumstances, the actual rejection rates are leading the way, and those rates are following that trend a week behind. And I think those are two important pieces of that. When you can follow that, and especially now that the product's been out there a little bit longer, you've got some historical trends that you can rely on and say, we know this is working. We know that we can count on this. So to me, that's why I love that one.
And how many loads are you guys moving monthly, yearly right now?
A month, we're probably looking at about 1,500 to actually, sorry, that's one side of the room. We're probably moving about 3,000 to 3,500 loads a month.
Okay, so you've got a fair amount of historical data that you can compare against SONAR as well, right?
Absolutely. And I will tell you one other thing that we do with those maps, which if people aren't doing, I would highly encourage. We do take some of our higher volume customers and import those map layers into, so those, if you came and looked at those maps, you'll see pink or blue dots that are certain customers for ours, so that our people can really say, hey, how is this affecting me? Because I think at the end of the day, that's always the question any broker is asking is, how does this affect me? Well, here's your customers.
Here's your main customers.
Here's they are, and that's where they're getting affected.
Right.
So I would definitely make sure that people, if they don't know how to use that, they need to upload their customers' lanes into that, because it's a great tool that we've been using.
Absolutely. And if you're a current customer and you're curious about how to learn a little bit more about uploading your customers, reach out to our customer success team, utilize our resources here. And if you've got customers out there and you're not a SONAR user and you want to learn more about it, obviously Luke and the rest of our account executive team, just give us a call, give us a comment, ask us some questions.
Yeah.
Let me get out of my main SONAR screen here. Whoops. I'm so computer not savvy.
So while he's doing that, I think we need to go back to something very, very important. You guys have a gym in your brokerage.
Yes, we do. It's a full-service gym. We've got pretty much all of it. It gets used every single day. I use it most every single day if I'm in town. Our folks love it. Again, I think there's so many great companies here in Chattanooga.
Yeah.
You have to be able to similar to how so many of these shippers these past years tried to come up with ways of how do we become a shipper of choice. Well, we want to be a brokerage of choice, so we got to make sure that we have as much enrichment and activities at our office space. We want our people to enjoy being there while they're there. So, it saves time for us as well. There's no gym super close, and going back and forth from the gym, you're giving yourself 30 minutes there just on travel time. So it gets used every single day.
How would you say that and some of the other amenities you have, how does that help maybe the performance of your employees kind of like on a day-to-day basis?
Well, we've also put in, like a lot of companies, we've put some health incentives out there this year, but I think more than anything, it is about empowerment, and it lets our folks know that we care. We care about you, we care about what you care about. So if you care about working out and you care about living a healthy life, we want to be a part of that too. We want to help you with that. So I think that that's a big piece of that. We want our people to know they're not just a number, and I think that the more that you do to make sure that you're showing your people that you appreciate them, the better. So I think at the heart of a lot of that, I know we spoke about that a little bit, but a lot of the promotional contests that we do are at the heart of that as well. Okay. What can we do to make sure our people know we care about you, you matter to us, you are who make Avenger great,
right?
We want you here for the long haul.
That's awesome. So you mentioned some hyper growth coming Avenger's way for hiring, and obviously you're not settled with the current customers you have, always looking for more. So tell us a little bit as we start to wrap up here on time. How can people apply at Avenger and learn more about joining the group, and what's the best way for customers to get in contact with you guys as well?
The easiest way is to go to our website. It's AvengerLogistics.com, easy enough. There is a careers tab that you can hop on to. Positions are opened up, both in our Minneapolis office as well as our Chattanooga office. We are hiring aggressively. Whether you don't have experience, whether you're thinking, what do I want to do? What's my next business move, my career path? We'd love to talk to you about what we've got going on at Avenger. Or for that matter, if you are at a brokerage that you don't feel like you're valued, we'd love to have that conversation as well. So you can hop onto that website there. As far as customers, there's also a great tab that you can go to contact us. That goes directly to me. I usually make first contact with the customers that reach out to our through our website, and we'll make sure that we take great care of you guys.
That's fantastic.
Sweet.
Yeah. Well, Jason, I really appreciate you being able to come on today. It's very exciting. On with SONAR, having our first customer visitor.
Happy to be here. Thanks for having me.
Is there anything else you want to mention before we wrap up here today?
No, again, just appreciate the time. Love what you guys are doing over here. Humongous fan. I love that the product continues to evolve, continues to get better and better. Looking forward to seeing what you guys do this year. You guys have literally made a lot of waves in the industry, so just looking forward to what the future holds for both of us.
Well, thanks so much, Jason.
Thank you.
We're going to take a quick commercial break, and then we'll be right back with John Kingston, oil market expert here at FreightWaves, and more with SONAR.
In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Voices from every corner of the supply chain, concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hi, my name is Tommy Igo, and I'm a sales development manager here at FreightWaves. A lot of times, I am the first point of contact for some of the most amazing companies in the world in the industry of transportation. So I get asked a lot what the future of FreightWaves and the future of SONAR is, and my answer is always that FreightWaves and SONAR are the future. We're living in it now, and we're just excited to continue to share it with people.
Catch Tommy Igo each Wednesday at 7 p.m. on With SONAR.
Is it 2 o'clock? 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 Not yet. Is it 2 o'clock? What? Is it 2 o'clock? What? Is it 2 o'clock?
What's at 2 o'clock?
Is it 2 o'clock? What the Truck is now live at 2 o'clock on FreightWaves social channels on Mondays and the FreightWaves TV app. Download it now.
And welcome back to With SONAR. Joining us now is our very special guest, oil expert John Kingston from right here at FreightWaves. John, how are you?
Thank you. Very good to be here with you, Johnny, and you, Ed. Doc Severinsen over there with the band.
I don't even know if that's a reference to the Johnny Carson show or if you don't actually remember mine and Luke's name.
Well, that's a second problem.
Fair enough. Well, thanks for coming on down from the mean streets of New York. You came in yesterday, is that correct? Mm-hmm. Awesome. And I know you talked a little bit on camera this morning about some of the things going on in the oil markets. But before we do that, I want you to tell the folks at home a little bit about how you came to FreightWaves, a little bit about your background at Platts.
Okay, well, I had spent covering the first 4.5 years of my career covering metals, and then I jumped over to Platts, which is the world's leading news and information agency on oil. I was there 29.5 years. Mm-hmm. They were part of McGraw-Hill, which is now kind of morphed into S&P Global. I left there and took a corporate role for 3 years. That disappeared, unfortunately, but luckily I knew some people that were familiar with the work FreightWaves was doing. And 3 weeks after my last day at S&P Global, I was down working for FreightWaves. It's been almost 2 years now.
Awesome.
So it's been very exciting.
We're certainly glad to have you. So what are some of the things that you've gotten to cover? I know, we've got IMO 2020 happening now.
Right.
What else is happening?
Well, obviously it took me a while to realize that the kind of things I wrote about at Platts were not necessarily of interest to a diesel guzzling audience.
Okay.
They're really end consumers. There's the saying, the world doesn't want to hear about the labor pains, it only wants to see the baby. So the idea being that what is the price of diesel and what's affecting it without getting too deep in the weeds. So that's been kind of complicated because of IMO 2020. Now let's start by saying that sitting here on January 22nd, that IMO 2020, which was supposed to send the diesel market into spasms of craziness, has not happened yet. We can talk about later whether it's going to happen. But we had to write about that here and try to make it not overly complex. So let's try to sum it up. IMO 2020 requires cleaner fuels in all sorts of marine applications around the world. This is a global requirement, which is very unusual. Usually you get an environmental rule that goes into effect in the EU. Right. You get an environmental rule that goes into effect in the US. This is the world. Globally. And without getting too complicated about it, it is diesel or some intermediate products that can be used to make diesel that were seen as the route to get there, to get rid of the high sulfur fuel oil and replace it with diesel-based fuel. So you can see where that would be a concern to a diesel buyer. Well, like I said, it hasn't happened. The models that were projecting it was going to happen haven't really kicked in yet. There is now a view, I think maybe by some people trying to save face, but that the world did get itself ready to produce these what they call the VLSFO, very low sulfur fuel oils, which really didn't exist before, and are now compliant with IMO 2020, that they stuck a lot into inventory. The inventory usually being on a ship that would then offload that to a ship that wants to buy it. The reports are that there were just dozens and dozens of ships in Singapore Harbor, which is the world's largest bunker market, with this VLSFO, waiting to meet the requirements. Sure. What happens when that inventory runs out? So I spoke to an analyst today, one I respect quite a bit, who, his scenario is that VLSFO inventory, let's say in Singapore and elsewhere, but Singapore very much so, will get drawn down off these ships, and then you're kind of in the scenario that they were concerned about. Okay. So their view is that it's not over. IMO 2020 I think still does need to be watched, but clearly up to now, the bullet has been dodged, and a lot of people thought the bullet might start like in September, October. It didn't happen.
I know we talked a little bit about it a couple of weeks back, and you and I had a private conversation. I messaged you and was like, why, with IMO 2020 in discussion and the Iran fiasco that was happening at the time, why are we not seeing diesel go through the roof? And we actually had a viewer comment on the show that, is it because we're getting more self-reliant here in the U.S. that we're not seeing that? That's not.
No, it's a global market for everything, and the U.S. has already had a great refining sector. There's plenty of crude. Think of it like this. Think of the oil markets as three buckets. You put crude into the crude distillation unit, which is the basic building block in a refinery, and you get out the light ends. The light ends are not finished gasoline, but the stuff that's used to make gasoline. Okay. You get the middle part out, the middle distillates, which are used to make jet fuel, to make diesel, to make heating oil, which we still consume in the U.S. Northeast where I live. And then you get the bottoms, which is the bunker fuel that goes into ships, the oil that is sometimes still used to make electricity, though nowhere near as much as it was in the past. Sure. This is shifting of oil from one bucket to another. This is oil that was in the middle bucket, that middle distillate bucket, to be used for applications in the heavier bucket, the bottom of the barrel bucket. That's very unique among environmental changes. Usually it's just a question of they went into gasoline and they cleaned it all up. They went into diesel and they cleaned it all up. Right. That's not this. This is taking diesel molecules, which, if we could show them all the carbon and hydrogen
get back to our chemistry classes,
taking those molecules and putting them into the bottom market and displacing those molecules. That's really ultimately what people were concerned about, analysts were concerned about, and it still is a concern to me. I don't know how you do it without some displacement. So we will see.
So it sounds like there might be, and obviously this is, we won't know until it happens or if it happens, but it sounds like there may have been since everybody knew IMO 2020 was happening, there may have been a lot of preparations made to kind of help soften the blow, and maybe that blow will hit, or if it hits.
Yeah, I mean, companies said, all of the big companies that you know, ExxonMobil, Shell, they would put out press releases months ago. They said, we are releasing to the market a new very low sulfur fuel oil that meets IMO 2020 specs, and it will be available in the ports of Singapore, Rotterdam, Fujairah, etc. They were certainly going to make sure that they delivered on that.
Sure.
Now, I'm not surprised at that. I'm just kind of surprised that in doing so, they didn't boost the diesel market. Let me just point out that around September or October, the price of diesel relative to the price of crude started to rise significantly. And I was tracking it, and I was thinking, okay, this is IMO 2020. Refiners came out with their third quarter earnings. They held conference calls with analysts, and several of them said, we're seeing this movement. We have no doubt that this is related to IMO 2020. So I figured, okay, here we are.
Yeah.
Well, it didn't last.
Sure.
And maybe they just did it gradually enough to fill those storage tanks in Singapore and Fujairah and Rotterdam and other places. The U.S. is surprisingly not a big bunker market. Okay. So that's why I'm citing places like Singapore. Those are huge bunker markets. And so maybe they were able to do it gradually enough that they didn't disrupt the diesel market. But as I said, you still got to take molecules from that one bucket to another. And I don't know that there was enough physical infrastructure built to do that kind of conversion to make it go smoothly. And that's what the analysts who are still saying, it's going to be a big deal. That's kind of what they're saying still.
Right.
So let's talk a little bit about what's going on here at home. I know you mentioned earlier today on FreightWaves Now that ULSD took a nosedive.
And again today, no, today not as much, but let's talk about the coronavirus.
Okay.
The coronavirus, of course, as we know, coming out of China, is making people in the oil industry remember 2003.
SARS.
And what happened in 2003, SARS.
Yeah.
Global jet fuel demand during the SARS period dropped about 1.5% to 2%. That doesn't sound like much. In a tightly balanced market, that's a lot.
Okay.
Yeah.
Okay. And and the price of oil fell. It was already kind of low, but it did fall, and jet fuel demand dropped the most. So people are now starting to hear about this coronavirus, and it's coming out of China, where SARS, of course, originated from, and they're saying, all right, you know what, this could be SARS too. Mm-hmm. So yesterday, this is on Tuesday, the price of diesel fell about 1.7% on the CME, which is the main place where you trade ultra-low sulfur diesel, the main commodity exchange. That dropped about 1.7%. The rest of the oil complex, crude, dropped about 0.7%. So 1 percentage point greater. Again, that's a lot.
Yep.
Today, that didn't really happen, and a part of it, as one friend of mine was saying, these markets are so beat up that at a certain point you can't beat them up anymore. But let's just take if you took a barrel of ultra-low sulfur diesel compared to a barrel of Brent on the last day of 2019, the difference between the two is about $19 a barrel. ULSD being $19 a barrel more than the price of Brent crude. That is today down to about $12.60 or $12.70. So in less than a month, it's dropped about $5 a barrel.
Right.
So that just shows you how relatively weak diesel is. I mean, the best, there's two ways to talk about diesel. One is the outright price, and that's all that truckers tend to care about.
Right.
But the other thing is, where is diesel relative to crude oil? Okay. And is it strong? Is it weak? Because that kind of an indication, how you're going to do. Look, you're not going to get $40 crude and $4 diesel. They're always going to be somewhat linked. But right now, diesel is just getting hammered. And again, a lot of people are just kind of stunned at this. When you look at the statistics, it's kind of hard to see anything in the stats except a significant buildup of inventories. So is that weak demand? I don't know. I mean, our trucking data here at FreightWaves is not showing a great market, but it's not showing a sagging market either.
Sure. Yeah.
but inventories have built significantly, which is, look, this is all ultimately great news for trucking companies.
Right.
I do want to note, though, that as far as the price of retail diesel is never going to come down as fast as the price of commodity diesel. What has happened, though, I was very surprised yesterday, the DOE weekly diesel price, which of course is the basis for fuel surcharges, only dropped 2.7 cents in the last week. And I know that
I've got that pulled up here, guys.
I know that the price at the pump has dropped more. So this is actually kind of a nice little arbitrage then that's been created for carriers, because they're going to put through a diesel price in their surcharge that I think is maybe a little elevated relative to the pump price.
Right.
And of course, it's not bad. It's not good for shippers. So it's it's kind of a zero. You could say it's kind of a zero-sum game. But I was surprised at the DOE price yesterday only coming down 2.7 cents. I expected a lot more. I expected, based on the data that we've got our DTS data, which is come from Truckstop on retail price is
the actual price at the pumps.
So that was down about 5 cents, and I figured the DOE was down 5 cents, but it wasn't. So right now I think the DOE price, which is the basis for fuel surcharges, a little bit out of whack compared to what's being paid at the pump.
Okay.
But that's good. That's good for carriers who are putting through the fuel surcharge. Not so good for shippers.
Okay.
Something I was looking at too, and maybe this doesn't have this may not correlate, but the price at the pump, we saw it's fallen a little bit, but I noticed the ULSDR, so the rack price, fell at a much more extreme rate over the last few days. Why is one falling?
The rack price is the wholesale price.
Right.
The terminology is a rack price, and companies put out. Exxon will, and I'm not going to say ExxonMobil because Exxon and Mobil have separate racks. Same company, but okay. So Exxon will put out a rack price in Allentown, and Valero will put out a rack price in Atlanta, and Shell will put out a rack price in Denver. It's all over the country.
Sure.
For a variety of reasons, and we would need a couple of hours to discuss this, okay? So you're just going to have to trust me on this one.
Sure.
You have 14 minutes.
Those rack prices have to stay competitive with the spot market, with what's going on in commodity markets and what's going on in physical trade markets, okay? The kind of numbers that Platts puts out every day, that the price of diesel in the Gulf Coast is X. If that's down 3 cents, the rack price has to come down too.
Right.
The retail price doesn't have to.
Sure.
The retail price is not, so if you go to fill up your truck or your car at an Exxon station, the price at the pump was not set by Exxon. It was set by the owner of that station. And they're going to try to keep their price up as high as they can. Sure. What is their competitive position? Is there a guy right across the street? Did he just get a load that was lower in price, so he cut his price to grab market share? I better not do this. I better cut my price.
Sure.
Yeah. I don't have a guy across the street, maybe I can keep it up a little higher. I always like, if you're driving in a place like New England, you get these beautiful little bucolic towns in New England, and they've got the one little gas station in the middle of town with prices that are just ridiculous because they have no competition, right? So what are they going to do? They're going to cater to people who are probably pretty wealthy, who they don't want to be bothered driving out to the highway to get the cheaper price, so they fill up at this little station and they'll pay through the nose. There actually, you can find videos on YouTube where, let's say, two owners of retail stations that maybe were across the street from each other have engaged in like these really nasty fist fights. If somebody cut the price too long, it's really hand-to-hand, literally hand-to-hand combat there. So anyway, I hope that answers your
I think so.
That the rack price is kind of a very macro with some microeconomic aspect to it, and retail gasoline is about as microeconomic as you can get, and retail gasoline and diesel.
So that's why we can see that volatility at the rack price where you stay a little bit more flat. And I'm looking at the comparison of our U.S. Average truck stop pricing versus our rack price. And one of the reasons, and Luke and I were in a discussion with some other sales folks earlier this week about why we're tracking both of these things, and that's because that some of your larger carriers, anyone that's around that 50 truck and above area, is negotiated this rack price.
Yeah,
they'll
plus or minus based on a rack price. Yeah.
And but it's these smaller guys that are having a look. So and then you have the DOE prices as well that are judging what your fuel surcharges are. So it's just all about adding that transparency and knowing what you're looking at. But why is it important if I am a small carrier, Luke or John? If I'm paying that truck stop price, why is it still important for me to know what the rack price is?
I can take a stab at that. So it's important because you, like the rack price, like John said, it's your wholesale price, right? So that's what the bigger guys are negotiating, right? They know what that is. Now, the biggest advantage that the bigger guys has over the little guys is the fact that they can pay rack. But DOE fuel surcharges are based off of the national average, right? So if the national average is based off of $3.06 a gallon or whatever it is today in the U.S., give or take.
Right over $3.
Perfect. So right at $3 a gallon, but rack price is probably around what, $1.90?
Yeah.
$1.90. There you go. So if the big guys like Warner and Schneider and U.S. Express, those guys of the world are paying your $1.90 at the rack or whatever they've negotiated, give or take, and then your mom and pops, your owner ops, or your small fleets are paying $3, right? They're both getting the same fuel surcharge, right? They're both getting that same fuel surcharge based off of $3 a gallon.
Yeah.
But all the big guys are paying,
way less,
over $1 less, right? So that there's being able to understand that and understand what you're up against gives you the ability to position yourself accordingly to know when the spread happens. Now, where it gets really interesting is when, like, let's say the retail price may go down, but the rack price may go down at a faster rate.
Yeah,
which it probably will. Yeah.
Right. Which is like, that's when the spread happens. So now they're making even more. Now, if you can attempt to position yourself better, it's when that spread gets less. It's when they get closer together. Rack will always be far lower than what the retail price is.
Sure.
But sometimes it won't be as far apart. When it gets close together, that's when you have a little bit of negotiating power with shippers.
And we do, we do have a series in SONAR Fuels,
the spread,
which shows the spread, and it's always interesting to watch.
Yeah.
So we just had some big news this week with SONAR and surrounding the rack price, the ultra low sulfur diesel.
The rack
price. A little tongue tied there. Anyway, now forecasting what next day pricing is going to be. That seems like huge news for these guys that are negotiating around that wholesale pricing. I mean, what can this mean for guys that are using SONAR and having access to this information? And I'm going to pull up the map here so we can see what we're talking about. Fools do. FULSDO.
Yeah, I always want to call it future ULSD, but it's forecast ULSD.
Yeah.
And I think you have to have a pretty good fuel management program to take advantage of it. You have to be constantly looking at the market. I think a small guy is probably not going to necessarily benefit from it. But if you are, I'm thinking that fuel advisors, like a company like Mercatus that goes in and kind of helps you manage your system, they're probably really looking at this. They're going to be able to see that the price tomorrow is going to be a little higher. It's going to go up X here, Y here, Z there. And exactly what you do with this knowledge base, I think, is kind of up to the companies. I think companies will, it's not the kind of thing you're going to probably run. You may go out and tell your fleet to kind of fill up today because it looks like tomorrow's going. But as my colleague Dean Croak was saying, of course, the problem could be that you don't want to get off the highway and get onto a long line of trucks waiting to fill up when hours of service are so important. But so I think it's almost going to be a function of how creative people are going to be able to use this in their own fuel management systems. I think the smarter companies will find a way and they will benefit from it.
Very cool. Yeah. Always be innovating, right?
No, exactly. It's so true. And just to kind of paint, is it still up for our viewers?
It is. Yeah.
So just to kind of paint the picture, or describe what you guys are looking at, the markets in blue are forecasted for next day, what the wholesale or the rack price is going to be, the change tomorrow. So it might say 3 cents, right? So if it's dark blue, it might be like 3 or 5 cents or whatever the numbers are.
Blue is going up, right?
Blue is going up. So that means that, like, let's say Atlanta is blue, for example. That means that Atlanta is going to have an increase in the wholesale price tomorrow. Right?
Let's remember too what the basis for this is. I talked earlier about the CME price. There are really 5 5 or 6 key physical markets in the U.S. for oil trading: the Atlantic coast, the Gulf Coast, the West Coast, the Chicago area, and a group in a group of states in the middle of the country called Group 3: Missouri, Oklahoma, Kansas. I think maybe just those 3.
You guys don't get a name, so sorry.
Yeah.
Just Group 3.
Yeah.
Just
Group 3.
Yeah.
Okay. There's also some trading on some other places, but it's mostly those 5. The people who set the rack prices, I mentioned Exxon setting a rack price, let's say in Allentown. Allentown's a good example. Allentown is on one of those smaller markets called the Buckeye Pipeline, and there is trading. I mean, if you and I were traders of gasoline up in the Northeast, we would trade barrels on Buckeye.
Sure.
Let's say Exxon will look to see what the Platts price is on Buckeye Pipeline, and that will be used as part of the basis for them determining what the market is going to be for what they're going to do in Allentown.
Okay.
In Atlanta, you mentioned Atlanta. Atlanta is on the Colonial Pipeline. The Colonial Pipeline is a big, giant pipeline, products pipeline. It runs from the Gulf Coast area, from Pasadena, Texas, up to Linden, New Jersey, with then a spur over to JFK for jet fuel. Atlanta's on it. So the decisions on Atlanta's rack prices, the people who make those decisions are going to look to the Gulf Coast price before making those decisions. Obviously, somebody in Los Angeles is going to look to the West Coast numbers, et cetera.
Sure.
So the rack price is really kind of like the third step in, if you assume the price on CME, the ULSD price on CME is number 1. Number 2 is the physical market. And then number 3 would be the rack price.
Yeah.
But again, in the same way I talked about the 2 guys going hand-to-hand combat at the retail level, individual rack markets can be particularly competitive or not. Atlanta is known as a very competitive market. Other markets, probably not as much.
Okay. Very
That's
interesting.
helpful to know.
So, and as you were talking, Luke, like being able to see that this is happening the next day, we're going to see some sort of change. And again, as you mentioned, blue going up, red going down. Is it okay to say, and as you mentioned, John, innovative, smart companies are going to know what to do with this. But just at a quick glance, guys that already have access to this say, okay, I wait till tomorrow to fuel up, or I fuel up now. Is that the quick snapshot of how you can benefit from this immediately?
Yeah, I think at a simplistic view, you can make that argument, right? I mean, just kind of like what John was saying, right? I mean, you don't want everybody get off at the same point. You have these long lines when hours of service are important, because hours of service are huge for carriers.
Yeah, the hours of service, a loss in hours of service will hurt a company more than paying a little more for
Sure,
diesel.
right. Sure. Yeah. So kind of just to give you guys a picture, in an ideal world, let's say hours of service doesn't change at all, and you have the ability to get off on the truck stop and save a little bit extra fuel. Whether that's okay, it looks like there's going to be a drop in fuel price tomorrow, I'll refuel tomorrow, or it's going to be higher tomorrow, let me refuel now. Let's say hours of service isn't affected. Absolutely, I think you can do that, and you can save money. We've tested it for the last so many months, and folks save an average of 3% on their fuel cost.
Right to the bottom line.
Right to the bottom line when they do that. But like John was saying, right, you have to be strategic on how you use it, on how you time things. And I think since it is new, I think those, how it gets used, I think that will continue to get developed. Everybody will have their own approach towards it. It also opens up a door for a lot of shippers with asset-based fleets. Right. And you also have a lot of different companies, because some companies even they get their fuel sent into their own terminals, right? Some are fueling up, like U.S. Express is typically a long haul driver, and they're fueling up at your Pilots and Flying J's of the world, versus Werner has a lot of their own terminals that they have their folks fuel up at. So there's a lot of moving pieces. Does it give you great visibility and a potential to save a lot of money on fuel? Yes. Is it going to be different for most companies and how they use it strategically? Probably.
Yes, as well. Yeah.
Probably. So, but yeah, super, super valuable, super powerful, and we're curious too. Like, if you guys want to see it, let us know. We'd love to learn a little bit more about how folks are using it. It is pretty new.
We've got our QR code back in action this week, down in the right-hand corner of your screen. So take a quick click there if you want to learn more about Sonar and just set up a live demo of this. John, what else is happening in the world of oil? for 2020? What can we expect?
I'd say we talked about the price of oil falling. It's down significantly. The diesel price on CME is down about 23 cents. And meanwhile, this is happening while Libya is effectively shut down because of rebel activity. Today alone, there was a force majeure declared on some exports out of Nigeria. There's problems in Kazakhstan, and there's also some Russian problems again. This is all on crude oil shipments, and yet the market keeps falling. And right now, the models show an imbalance of supply and demand next year.
Yeah.
Too much supply relative to demand. That's great for truck drivers, no doubt about it. But it just keeps getting hit with all these things that in the past you would think would be driving prices up. And we haven't really talked about like the Iranian situation, or and yet the market just wants to go down. It's kind of stunning a lot of people. It really has. The world is just, and one other factor, the price of natural gas is down below $2 per MCF in the U.S. At a certain point, it's not quite as linked as it used to be, but that will work to drag down oil at a certain point.
Okay.
So now that we have all this knowledge around oil, we should all go out and day trade futures for oil, right?
I'd suggest not.
Not? Okay. Just kidding. Don't do that.
Keep the day job, okay?
Okay, keep your day job. I thought I had a future, but I guess not.
You do have a future. It's here at FreightWaves.
There you go. Here at FreightWaves.
Let's make the money, right? The money-making mask. So, John, you're one of our market experts here at FreightWaves. How can people learn more about you and hear more information from you? Current subscribers get access to the Daily Watch, and you write an article every single day, about what's going on.
But I may also write for the main FreightWaves.com page as well.
Okay.
And in fact, put up a story about an hour or two ago about today's decline in price. I'm Jay Kingston at FreightWaves.com. My Twitter feed, where I tweet observations about the world of oil and occasionally some other things.
Sure.
is John H. Kingston, and be happy to hear from you.
Awesome. Well, we look forward to continuing to see some of the great inspiring things with oil and gas that come out from your post. We've got about 2 minutes left. Anything current that our viewers need to know about with Sonar and the oil markets that we haven't already talked about today?
Yeah, well, we're going to be adding a series from Platts. You will not be able to see the Platts price, which is the world benchmark, the benchmark price. What we're going to be doing is adding a series of graphics showing where these diesel markets that I talked about, and not just diesel, but distillate market, jet fuel, et cetera, how they're doing relative to the dated Brent crude oil benchmark. So if diesel does start to soar because of IMO 2020, you'll see that in the spread. If you had it now, if it's not out yet, but if you were watching it now, you would see that spread falling. So it's a pretty good indicator of the strength of diesel relative to crude. It's a very good indicator relative to the diesel. It's like I said, it's not the actual Platts price, but it's based on the actual Platts price. So we're pretty excited about that.
Awesome. Now I know you immediately, when I said, let's talk about oil, you said, let's talk about the coronavirus. I was like, okay, where are we going here? It's amazing to see just how correlated all of these things are, and being able to see that within Sonar, and reading your Daily Watch articles and getting all of that information is just, again, we're here to add transparency to everything when it comes to the transportation industry. So,
I mean, the coronavirus, do you get that from drinking too much Corona? Is that where it came from?
I've had the coronavirus.
I have it. I have it.
You've never had it, huh? Well, John, I really appreciate you coming on the show today. It's exciting, as always, to get to hear some of your insights. This is the first time you've been on our show here to talk to me and Luke, so thank you so much for coming out.
Can't wait to come back again.
Guys, join us on With Sonar every Wednesday night, where we'll talk about what the new data and the exciting things happening with FreightWaves and with Sonar for everyone here at FreightWaves. Again, I'm Tommy Igo, Luke Velasca. Y'all have a great evening, and we'll see you next week.
We do have breaking news to report. Yet another trucking failure. It seems to be a story we've been covering a lot this year.
We get it. We're in a volatile industry.
Sound speed. Speeding.
But FreightWaves TV is here to keep you calm during the chaos.
Every day we give you actionable insight. and real-world perspectives from industry leaders.
Who knew freight could be this fun?
And if the supply chain is all about cooperative competition, so are we. FreightWaves TV celebrates your victories and highlights your successes.
So sit back, relax, we'll take it from here.